Hey everyone, this is Bergman, founder and CEO of IRA Financial. Welcome to another episode of AdBits, where I will be sharing bits of knowledge about self-directed retirement. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, and welcome to another episode of AdBits. I'm Adam Bergman, tax attorney and founder of IRA Financial. And on today's ad mail, is this the last chance for the Mega Backdoor Roth 401k? It could be. Why? Because there is a proposed provision in the House Ways and Means tax bill, and I want to say it's proposed, that would remove the opportunity for anyone, irrespective of income, to do a Mega Backdoor Roth 401k contribution. And what is a Mega Backdoor Roth contribution or an after-tax Mega Backdoor 401k contribution? Essentially, it allows someone who has a plan, a 401k plan, that has the option built in to the plan to make an after-tax contribution and then either convert it to Roth in the plan or transfer it to an IRA and then convert it to Roth IRA tax-free. And obviously this is super exciting because you can put a whole lot of money into a Roth. In 2021, the max is $58,000 or $64,500 if you're over 50. So if you contrast that with a Roth IRA, which has a $6,000 or $7,000 limit if you're over 50, this gives you the ability to do almost 10 times more, $58,000 or $64,500, dollar for dollar, right? If you make $70,000 and you're over 50, you'll likely be able to get your $64,500 in there because the 70 is still subject to self-employment and FICA, which is about 15.3%. So it's an amazing way and the best way to really supercharge your retirement account with Roth funds. Now, not every plan allows for it. In fact, if you work at an employer and there's multiple employees, more likely than not, you will not be able to do a Mega Backdoor Roth 401k. Why? Because of the ERISA testing, specifically the ACP, contribution percentage test, which will not be satisfied because not enough people will likely take into account this option, and thus it will fail the test. Because in order to satisfy the ACP or the ADP or various ERISA testing, there needs to be more rank and file employees and not just top-heavy employees for making these types of contributions. And in almost every case, it's not the case. Now, there are plans that offer it, even big ones. And there was a recent Wall Street Journal article about this concept, the fact that this may be the last year that you can get the Mega Backdoor after-tax contribution option. Why? Because if the tax provision becomes law and gets placed in a final tax bill, it will be effective beginning January 1, 2022. So you need to make these contributions this year before 12/31. Now, this Mega Backdoor Roth 401k really only applies to solo 401ks. What's a solo 401k? It's essentially a 401k plan specifically designed for someone that's self-employed. The eligibility requirements are as follows. One, it's got to be a business, right? You got to do something. It could be Schedule C, you can do a partnership, LLC, C Corp, S Corp. Just needs to be a business. Number two, you cannot have any full-time employees other than yourself, spouse, or other owners and spouses. So there cannot be any non-owner employees that are non-spouses that work more than 1,000 hours. You can have 1099s, you can have your other co-owners, your spouses are co-owners. You just cannot have any non-owners or spouses that work more than 1,000 hours during the year, not a month, 1,000 hours during the year. They work 800, they're good. They're a 1099, they're good. So those are the two eligibility requirements to get into the solo K. Now, if you are eligible, let's say you sell gifts on eBay, you sell memorabilia on eBay, or you sell t-shirts on Etsy, or you sell masks on Amazon, or you do some consulting, you're a math tutor, whatever the case may be, even if you have a full-time job, you can still set up a solo K and use that 401k to potentially do Mega Backdoor Roth 401ks. Yes, you are capped at the 58 or 64.5 if you're over 50. So you just have to keep that in mind. Even if you are making contributions to another plan, you are still going to be capped generally at that 58 or 64.5 limit. But you have the ability to go dollar for dollar. So to just describe how the solo 401k works, there's generally two components. There's the employee deferral, which allows you to contribute $19,500 or $26,000 if you're over 50 in pre-tax or Roth or any combination. Okay, so you're generally in most plans, the most you can put into a Roth 401k is either $19,500 or $26,000. Now the profit sharing, which is the second component of the solo 401k, will let you put in $20,000 if you're a Schedule C or single member LLC, so that's 20% of your comp of your net Schedule C amount, or 25% if you're a W-2. So for example, you make $100,000, you're an S Corp W-2, even if your corporation has $1 million of profits, it's all keyed off your W-2, not your profits. It's keyed off your W-2. So let's say you're under 50, you make $100,000 W-2, you can put away $19,500 in a Roth or pre-tax or combination thereof, and you can do $25,000 in pre-tax. You can then convert it to Roth, assuming you, now under the Ways and Means you make less than the $450, but you are going to be able to at least in the $19,500 do the Roth, irrespective of account and income size. Now the Mega Backdoor Roth would allow you to go direct, 58 or 64.5, even if you had just 70 or so of income. So in my example, you had 100, you're only going to be able to do 19.5 plus 25, approximately like 43,000, and only 19.5 would have been Roth. In order to get that profit sharing, that 25,000 in our example to Roth, you'd have to do a conversion and pay tax on that amount. In the after-tax Mega Backdoor, you can go dollar for dollar, 58 or 64.5. So it lets you put a lot more into Roth without having to have the income. Okay, so on that $100,000, I was only going to be able to get the 43.5 if I maxed out. If I did the after tax, I can do the 58 or the 64.5 if I was over 50 because it's dollar for dollar. There's no percentage like the profit sharing. So it's a really, really amazing option, and it's really used by self-employed. And that's why I was surprised that this made it into the bill, because this doesn't deal with rich, Peter Thiel type private equity executives. They're not dealing with this stuff. They don't care about the $50,000 in Roth. They're making their money on their investments. They're not necessarily making their money on the contributions. The average American is, right? The small business owner that wants to put away 30, 40,000 in a Roth. They're not the billionaires or the multimillionaires. They're the hardworking folks that want to put away money and have a nest egg for the family. And this bill, if it gets passed, this provision specifically will stop small business owners, people that have solo Ks, people with no full-time employees, right? This isn't the Peter Thiel, the Jeff Bezos that have 40,000 employees. This is the sole practitioner. This is the consultant. This is the person that is selling stuff on Etsy, maybe an Uber driver that wants to put money in their Roth IRA and wants to do the Mega Backdoor. This is going to stop it. So it's kind of too bad. I desperately hope this provision doesn't get passed, but as of now, it's in this proposed bill. Okay, so it would stop, and this is what it says: section will prohibit all employee after-tax contributions in qualified plans and prohibits an after-tax IRA contribution from being converted to Roth, regardless of income level. Okay, so you're not going to be able to do an employee after-tax in a qualified plan and an after-tax IRA into a Roth, regardless of income level. It starts January 1st, 2022. So you still have a couple months. We're in 2021 still. If you're listening and watching this, hopefully you're in 2021. You still have a chance. If you're self-employed, you can set up a solo K. And if you're a Roth lover like I am, you have the ability to make a Mega Backdoor Roth. Even if you make $40,000 minus the 15.3 self-employment FICA, you can still dump in good $33,000, $34,000 in a Roth. Whereas if you did a Roth IRA, you'd only be able to do $6,000 or $7,000. If you just did a regular 401k, you'd likely only be able to get the 19.5 if you were under 50. So this is an amazing opportunity to do it. If this bill gets passed, Roth conversions will be disallowed if you make more than $450 if you're married, filed jointly, or $400 if you're single. So they will significantly curtail conversions. They will eliminate the Mega Backdoor Roth 401k. So just to summarize, it's still provisional, it's still proposed. A Mega Backdoor Roth 401k generally only works for solo plans. If you work at an employer with multiple employees, you can ask, but I guarantee you, even if they have the option, they will not let you do it because it will fail the ACP ERISA test for 401ks. So now it brings you back into the solo 401k world. If you have a solo K, this may be your last chance up until 12/31/2021 to do Mega Backdoor Roth 401k contributions. If you do not have a solo plan yet and you are self-employed, this is your last chance to set up a solo plan. You have, hopefully you're listening or watching this prior to 12/31. It takes a day or so to set up a plan through IRA Financial. We would love to help you out, or you can go somewhere else, just get it done, and then dump that money into the plan after tax, and then you can convert it in the plan to Roth, or you can just move it to a Roth IRA outside of the plan and convert it to Roth with no tax, right? Once you go after tax to Roth, there's no tax because it's already after tax. Whereas if you go pre-tax to Roth, there's tax on the conversion. This basic Mega Backdoor Roth 401k is an amazing strategy. It's really too bad that this bill wants to eliminate it because, again, it doesn't attack millionaire or billionaires. These are middle American, middle class to upper class to small to low class business owners that aren't making that much money, that want to do Roth, that want to save, and this provision will stop it. This doesn't stop it because it can't be done in the Apple or Tesla plan anyways. This is happening only in solo plans, which are being used by small business owners. And unfortunately, they want to eliminate it. The whole concept of the Mega Backdoor Roth 401k for you technical, geeky people like me is IRS Notice 2014-54 basically allowed for the Mega Backdoor Roth 401k because it essentially allowed to segregate pre-tax and after-tax contributions when it was rolled out to an IRA. Prior to 14-54, it was all aggregated and it was very difficult to do this Mega Backdoor Roth. Now, since 14-54, you can do conversion in the plan of after-tax to Roth, or you can move it out of the plan into an IRA without a plan triggering event and then convert it to Roth, no tax. So you'd have two options. You would be able to keep it in the plan as a Roth 401k, 58 or 64.5 in 2021, or you can move it to a Roth IRA, 64.5 or 58 if you're under 50 without a plan triggering event. Again, it's a great strategy for Roth lovers. It was a great strategy for, and I said in the past tense, I hope I'm wrong. I hope this provision doesn't make it into a final bill. If you also have an issue with this provision, reach out to your member of Congress, reach out to your senators. Let them know that, hey, this is not going to stop the Bezos or Peter Thiels or these hedge fund honchos. They don't care about 401k contributions. They're making their money on their carried interest, which the Dems caved. And instead of treating it as ordinary income, they're just going to extend the holding period from 3 to 5 years. So they care about their carried interest. They don't care about 401k contributions. In fact, a lot of these private equity hedge fund places, they barely even have 401ks. That's not where they're making their money. So to eliminate this Mega Backdoor Roth 401k, they're not trying to hurt the mega rich people. They are hurting the people that make 4 or 400,000 or 200 or 100. There's no income level. If they said, okay, this income level applies, so if you make more than 4 or 450, you can't do the Mega Backdoor. Okay, maybe I wouldn't come down as hard on this provision. Maybe I would accept it. But to just have no income limitations, to be like, tough, you can't do this, even if you make 80 grand or 70 grand, what's going on? It doesn't seem right. Why are we discouraging people from contributing, from using the retirement system? That's what these provisions are doing. They're going to turn people off from the 401k world. They're going to turn people off from the IRA world. They're going to turn people off the retirement system, and they're going to turn people onto just saying, hey, I'll either spend it or I'll just save it in my account because, hey, the government can't change the rules on it. It'll be in my bank. I'll just grab it. That is the problem. Why are people interested in using Dexas, decentralized exchanges for cryptos? Because they don't trust the government. They're worried the government's just going to take their cryptos, change the rules on them. So it's really bad policy. It seems they're trying to, again, stop these perceived abuses by rich people. It's not happening. There's less than 500 Americans that have more than 25 million in a retirement account, okay? If it was so easy, there'd be hundreds of thousands. It's not easy. There's less than 28,000 out of 350 million Americans that have more than 5 million. And that includes time value of money, right? Someone who's 75, 80 now, and maybe has been saving in a 401k since 1974, they probably have 5 million, even though they just bought S&P 500 or ETFs or mutual funds. Doesn't mean they're sitting in this billionaires boys club trading tax stories, sipping champagne, eating caviar, and having their servants rub their feet. It doesn't happen. It's not easy to do this, right? These are strategies that everyday Americans are using to save for themselves, save for their families, using the system, using the rules to benefit themselves and their family, to save. That was the whole concept of these rules when they were created back in 1974 and back 2014-54 to allow small business owners to use the Mega Backdoor Roth to put away more money in a Roth. One last point. This doesn't hurt the government. Why? These are Roth contributions. They're not tax deductible like pre-tax. Pre-tax IRAs, pre-tax 401k contributions hurt the government. Why? Deductions mean less tax the taxpayer will be paying, right? If you make $50,000, put $10,000 in a pre-tax 401k, you're only paying tax on $40,000. That means less money for the Treasury. So these provisions have zero impact on revenue raise, okay? They are going to hurt everyday Americans. They're going to hurt small business owners. And they're in fact going to hurt Treasury, because what's going to happen is you're going to tell small business owners, hey, don't do Roths. Don't do mega backdoors. Don't do Roths, because the rules are going to change on you. We're going to grab that money anyways. Just take the deduction up front. Do pre-tax contributions, which is what people have been telling me for the last 20 years. I have a mentor of mine who's been in the pension business for 40 years. And he's always been against Roths. He's like, Adam, do not do Roths. Why do you do Roths? I was like, Tim, because I don't want to pay tax when I'm 59 and a half. I believe in my investment goals. I believe in my investment strategies, and I don't want to pay tax. I will give you the deduction today. It's like, Adam, the government's not always playing the same game you are. The rules change. The government can just change the rules whenever they want, right? They're the ultimate referee. He's like, guess what? 1982, they changed the rules on Social Security and said, guess what? It's now subject to tax. Prior to 82, Social Security was not subject to tax. It was after 82. He's like, they can do it again with Roth. And you know what? He was right. They're changing the game. If these provisions get passed, people will lose faith in the retirement system. Whether you're a Roth person, people are going to move to pre-tax IRAs, pre-tax 401ks, which is going to reduce tax revenue for the Treasury. It's not going to help pay for this infrastructure bill. It's not going to help pay for all these social programs because the government's going to have less money. But this, for some reason, got stuck in this bill as a way to stop perceived abuses by these mega rich people. And I'm telling you, I've worked with these provisions for many years. My clients are not mega millionaires. They're like you and me. They're hardworking Americans that want to do well, that want to build a business for their families. They want to sometime retire with money and go on nice vacations and take their kids on vacations, have money to help their kids and their grandkids. That's what it's all about. It's not about buying $50 million yachts or private jets or their third mansion in Hawaii. This is not what it's about. These provisions are stopping small business owners from saving. It's not like every small business owner is putting away the 58 or the 64.5. It's not as if that's happening. What's happening is this provision will turn people off Roths, turn people off the retirement system. If they are going to make contributions, they'll do it in pre-tax and it'll take money out of Treasury. So hopefully someone in Congress will wake up. Someone on the Ways and Means will wake up and say, hey, what are we doing here? These retirement provisions, all of them, really make no sense. If you want to keep the cap, okay, whatever. You want to stop people from generating more than $10 million in retirement accounts. It's not an issue, right? Because there's probably less than 1,000 people out of 350 million that are in that bucket. But if that's your goal, if that's the game you want to play, whatever. I don't care, okay? But I have an issue when you're trying to stop small to mid-sized business owners who have a solo K from putting money into a Roth. they're not looking to be multi-billionaires. They're just trying to save. And you are de-incentivizing them from saving. I wish you understood that. Yes, some will go pre-tax. Some will just scrap the retirement system. Say, you know what? I'm just going to spend it, put the money under my mattress. I don't trust you, government. If you can change the rules now, you can change it in 5 years. You can change it in 10 years. You can change it in 30 years when I really want that money to retire. So you know what? I'm just going to spend it or buy a house. And this way I have a hard asset that I know I can touch that you can't take from me. And that is too bad, because I've always said the U.S. retirement system's always been bipartisan. Democrats, Republicans. So one thing they can always agree on is retirement savings work. The U.S. retirement system works. And this bill could potentially jeopardize that unity and that belief in the retirement system. And I hope it doesn't happen. So sorry for getting off a tangent. I know my AdBits are usually short and they're usually like a right to the point tidbit of information. But again, this is the last chance to do your Mega Backdoor Roth 401k. Don't take chances if this bill gets passed, if this provision makes it in the bill, which I think there's a good chance because it doesn't seem like there's enough people complaining. It just may find its way into a final bill. Take advantage of this opportunity. Dump as much as you can into a Roth 401k. At least you'll have it to invest for your future and the future of your family. So thanks so much for listening. If you're watching on YouTube, much appreciated. Don't forget to subscribe. Also, why not give us a like? Always a good thing. And again, just thanks for your support. Really appreciate it. I've got so many amazing emails and Instagram, Twitter, Facebook messages from people saying, keep up the good work. Thanks for fighting for our retirement system. Hey, this is my life. This is my passion. I'm doing it for you. I'm doing it for me. I'm doing it for our kids. Doing it for our country. The retirement system works. It's one of the things that make the ability to bridge the wealth gap, right? This works for everyone. Democrats, Republicans, irrespective of skin color, irrespective of religion, irrespective of where you live in this country. Time value of money, compounding returns works. It's math. Okay? You don't trust me? Trust Albert Einstein. He's the one that said compounding returns is the eighth wonder of the world. Not me, and not a Democrat or not Republican. And unfortunately, this bill is going to potentially jeopardize our belief and our need and, unfortunately, our desire to use the retirement system to generate wealth. So I desperately hope it doesn't happen. If you, one last plea, reach out to your member of Congress, your senators. It's provision 138311. There's also 138312 and 138314, which talks about credit investors and prohibitions on IRAs investing in small businesses. Let them know, hey, these provisions don't raise a lot of money. There's really no need for them. And they're going to do a lot more harm than good. So thanks for letting me complain and just going on a tangent. It feels a lot better. You should try it. And I've been actually doing it. I've had some success, been talking to members of Congress and also a bunch of staff in various Senate offices. So if you are listening or watching this like post 2022, leave me a comment. I hope I was successful in getting these bills or this provision not part of any future bill. If I'm not, sorry, I tried. Our industry's trying. Trust me, we're doing everything we can to get these provisions removed, especially the Mega Backdoor Roth 401k. So again, thanks everyone. Stay safe and talk to everyone again next week.